What's going on YouTube? In this video, we're going to go over PayPal, go through 7 to 8 different ways of valuing PayPal to come to a concluded purchase price area, and also look at the technicals are forming on PayPal chart. So come over here to PayPal. Over the course of 1 year, down 40%, year to date, down 20%. Couple two key catalysts in PayPal. One of them was the CEO is being replaced. Um, Alex Chris from Intuit will be the new CEO effective September 27th. So that's usually a big deal for most investors, is to know who's going to be leading this company going forward. So now that they know, they might have some more insight and might be a little more comfortable, or maybe still a little skeptical as what he can and cannot do. The next thing is PayPal made its own stablecoin called PYUSD. So we come over here, the valuation sheet. We got our ticker typed in for PayPal. Our future earnings per share growth rate is 15%. We have no dividend yield on this company. We have forward revenue growth of 8.5%. So that gives us a Peter Lynch, mind you, fair value of $54 a share, return of invested capital of 9.3%. It's currently PayPal is trading for a 1.9 peg, and the forward peg is 1.2. We have only a couple multiples comparisons that were actually profitable here, so it's not the best valuation when you only got two other companies to choose from, but there might be a couple others we can throw in there too. But for the most part, this is what we're working with. $128 for an average or a buy price for PayPal based on multiples. Over to your Graham's valuation, all these numbers autofill. We get an intrinsic value of $72 a share. We have a manual PE, type in their cash, their debt, cash from operations, annualized, and we get 16 years until this company equals its market cap value, which is a 1.85 peg based on that multiple. Come over here, price to book. We are sitting at 8.5 for price to book. Discounted cash flow valuation. We typed in all of our information over here to get a weighted average cost of capital, and we got 6.5% for that. That transfers over to here. We have a perpetual growth rate of 2.5. We have a growth rate of free cash flow. So I came up with this number. We have an average growth rate based on previous years, the past 5 years, of 40%. Analysts were, I believe, expecting, I believe it was 18%, or no, sorry, 9%. So I just kind of went in the middle, roughly, and just said, okay, I'll go with this number and see what we get. So we got our cash, our debt, our shares outstanding, and gives us a discounted cash flow value of $230 a share. So even hypothetically speaking, we put in the analyst expectations of 9%, that still puts us at $144 a share. So either way, it's still, let's try 3% once. What's 3% look like? Even at 3% free cash flow growth rate, you're sitting at $103 per share for fair market value for this. And come over here, our last valuation, type in our ticker here. I call this Rule 72. We take our growth rate, our EPS growth rate, future growth rate. 15 goes into 72, 4.8 times. 4.8 goes into 10, 10 meaning 10 years, twice. So what we do is we take 3.5, we double it one time, which is then 7, and then we double it a second time, which is then going to be 14. So our future growth, or our future EPS on this company in 10 years estimated is 14. So that gives us a fair value today of 105 with a purchase price of a 30% margin of safety of $73.50. So over here we have all of our equations, our valuations that are loaded in from the previous two sheets that we did, and they're all plugged in over here. So between the five valuations here that give us an actual dollar amount, Our average buy price is $118 with a 30% margin of safety for $82 per share for a purchase price. So that kind of gives you a general idea of where this stock is valued based on its financials. And this is a weekly chart, and nothing good to see here on the stock chart. The You can see we're in this channel, just kind of bouncing around in this channel here, and now it looks like we're heading back down to retest the bottom side of this channel, which depending on how quick or how slow it comes down, you're talking 50-ish dollars a share, $48 a share. And if you look to the left, your next area of support, in my opinion here, is probably this $44 range. And that's pretty close to IPO. So that would have to think that this definitely will hold in this range based on that. Um, but it definitely looks like on technical patterns here, it looks like we're gonna bounce, retest the bottom of this or top of this trend line, low bottom of the channel, and then we'll probably bounce back up, retest the top of the channel, and maybe that is when we break through, and then we come back up to what this company is valued at, which is right about here, about $102 a share, $103 a share. Now, depending on what valuation model you choose, or if you like to add in multiple, all of them together, like I do, to give me more of a general range or general area based, because if you pick one or two models, you might saying, oh, this company's only worth $40, or you might be saying, oh, this company's worth $230. Like, I don't know. I personally like to have several different, basically, opinions mixed into one answer, and I'm gonna stick with that because I feel like that's gonna give me the best results. So based on technicals, based on valuations, valuations say this thing's worth a lot more than what it's currently trading for. So that being said, I would be looking to accumulate this stock in this channel, but I think I'm not going to accumulate too heavy until it wants to break out of this channel. Once I start seeing a breakthrough of this channel, then I'll be interested in wanting to pick up some shares. And maybe it goes all the way back up to, 100 and, $210 a share, and you can make pretty good money, pretty good return on your money. But that's it for this video. Let me know your thoughts on this, what you think your buy price is, and if you already own or if you're looking to buy. Other than that, thanks for watching. We'll be back soon with more.